Good morning, everyone, and welcome back to Morning Markets on Tuesday, the 4th of August. A couple of things that we've been discussing as an investment team at True Potential this morning. The first of which was just looking at the ISM data from the US and the equivalent from the Eurozone, the Purchasing Managers Indices yesterday that came out. Encouragingly, across the board, these did show improvements in trend and crucially came in with readings above 50. In these indices, a reading above 50 indicates that those being surveyed are more positive in the outlook than they had been previously. So that's encouraging and speaks to that ongoing recovery that we're seeing across economies. Firstly, looking at the Eurozone, and I think this was one of the key supports for why the equity market in Europe was stronger yesterday. The Euro Stoxx 50 up over 2%, and indeed the FTSE 100 also up over 2% on the day. Looking into the numbers, what can we see? Well, we can see across the majority of the Eurozone improvements in purchasing manager sentiment, and indeed the new orders component as well continues to improve. So that points to continued improvement there. Also within the data, we can see that it's very much about domestic economies recovering. The export side of these economies and the businesses being surveyed still are having a struggle to get things back to pre-COVID-19 levels. In Italy, it's also worth mentioning that we had a reading above 50 for the first time in a number of years. I think looking back at the chart, it's August 2018 was the last time we saw a positive reading above 50 for the Italian economy. So that's positive. Turning then to the US, again, a reading that came in ahead of expectations and improving month on month. So the reading came in at 54.2 versus 52.6 in June. Digging into the ISM data, it's quite interesting just to observe that the new orders component there is above 60 for the month of July. So that's strong and indicates some momentum within businesses in terms of rebuilding inventory levels and resupplying the supply chain. I think the other thing to note there is that the performance in the US is very much in the face of everything we know that's happening with COVID-19. So strength coming through in the ISM data, despite what we're seeing in some of the higher frequency data around what the consumer is doing at this point in time. So that dichotomy is something to observe over coming weeks and months, just to see which data point is winning out, the timely high frequency data or the survey data on expectations. Then in other developments yesterday, it's worth mentioning just what was happening in the US politics between Democrats and Republicans. We touched last week on the importance of continuing discussions there in light of the fact that a number of the benefit packages, so the supplementary unemployment package of $600 and a number of those related to housing, would expire on the 31st of July. Unfortunately, we haven't as yet got agreement between Democrats and Republicans, and indeed reports overnight suggest that the Republican Party are looking at ways that this can be moved forward by presidential orders, so potentially trying to bypass both the Senate and the House in taking things forward. It's important because these factors have been supportive of the consumer, they've been supportive of aggregate demand recovering in the US, so we do need to see a resolution here in the near term. I think it's interesting to really contrast what we got in March with Democrats and Republicans really working together to move forward a package versus where we are today. That speaks to, I think, one factor, primarily, the fact that we're approaching the presidential election and nobody wants to give ground, and it's effectively setting the stage for that process going forward over the coming months. The importance of this isn't lost on the market, it isn't lost on Fed officials either, where we saw a number yesterday calling for this fiscal support measures to be worked through and for the government to move forward with them. That's it for today. Please, as usual, if you're enjoying the videos, please do like them on YouTube, and if there's things that you would like us to address on them, just let us know. Many thanks.